The trading relationship between the United States and South Korea entered a new and highly contentious chapter this week, when U.S. President Donald Trump announced a significant increase in tariffs on South Korean imports. The move, which hikes the tariff rate from 15% to 25%, represents a major escalation in trade policy and has both economic and diplomatic implications that extend far beyond the two countries directly involved. In a statement posted on his social media platform, President Trump said the increased tariffs were a response to delays in South Korea's legislature approving a trade agreement the two nations had negotiated last year. According to Trump, the deal, which he described as historic, was intended to create a broader framework for trade and investment, but South Korea's parliamentary body had not yet enacted the necessary legislation to implement it. As a result, Trump argued, the United States was justified in restoring higher duties on a wide range of South Korean exports, including automobiles, lumber, pharmaceuticals, and other products. The tariff increase marks a return to a more aggressive trade posture towards South Korea after a period in which tariffs had been lowered under earlier negotiations. Under the terms agreed by both sides in 2025, the United States had previously reduced duties on many South Korean goods from a 25% rate to 15%. In exchange for South Korea committing to invest billions of dollars in the U.S. economy. That agreement also included promises of future cooperation on broader investment and trade measures. President Trump's announcement this week upends much of that progress by reclaiming the higher tariff levels, asserting that South Korea's delays in ratifying the agreement constituted a breach of faith. The decision immediately reverberated through financial markets and diplomatic circles. South Korea, which had not received formal notification of the change before the announcement, scrambled to respond. Industry leaders and government officials in Seoul expressed concern about the potential impact on key sectors of the economy, particularly the automotive industry. South Korean automakers, such as Hyundai and Kia, rely heavily on exports to the United States, where millions of vehicles and components are sold each year. The potential increase in tariff costs has heightened uncertainty about future sales, pricing, and profitability for these companies. Stock markets reacted with volatility in the hours following the announcement. Initially, shares of major South Korean automakers fell sharply as investors priced in the potential impact of higher duties. However, some of these losses later narrowed, reflecting market expectations that negotiations and consultations between the two governments could still influence the final implementation of the tariffs. In broader markets, benchmark indices in South Korea saw fluctuations as traders assessed the economic fallout and the wider impact on investor confidence. The South Korean government signaled that it was preparing to respond diplomatically, with the country's trade minister expected to travel to Washington for talks with U.S. officials. Discussions were anticipated to focus not only on the tariff issue itself, but also on broader trade and regulatory concerns that have arisen in recent months, including disputes over regulatory actions affecting U.S. e-commerce companies operating in South Korea. These issues have added complexity to an already sensitive trade relationship, raising questions about how closely economic ties between the two allies can align with political and strategic interests. Economists say the tariff hike could have a ripple effect throughout the global economy. South Korea is one of the United States' largest trading partners, with total bilateral trade amounting to well over $100 billion annually. Many South Korean companies are deeply integrated into U.S. supply chains, particularly in the automotive and technology sectors, where components and finished products flow back and forth. Higher tariffs could disrupt these supply chains, making South Korean goods more expensive for American consumers and potentially prompting adjustments by multinational corporations in how they source and price products. The decision also raises questions about the future of international trade agreements and the stability of global trade relationships. In recent years, the U.S. has imposed higher tariffs on a number of countries in an effort to protect domestic industries and reduce trade deficits. While these measures are often framed as efforts to create more balanced trade outcomes, critics argue that they can undermine confidence in the rules-based trading system and provoke retaliatory measures that slow economic growth worldwide. For South Korea, the timing of the tariff increase is particularly challenging. Businesses in the country had hoped that the past year's negotiations would lead to clearer and more favorable conditions for trade with the United States. Instead, the renewal of higher duties introduces fresh uncertainty. Small and medium-sized enterprises, which depend heavily on exports for revenue and employment, may find it harder to absorb the added costs or to pass them on to buyers without hurting competitiveness. Larger multinational firms, while better equipped to manage tariff risk, may still revise investment plans or adjust production strategies in response to shifting trade dynamics. Meanwhile, U.S. policymakers have defended the decision as a necessary step to enforce commitments and uphold the integrity of negotiated trade deals. Supporters of the tariff hike argue that without firm action, trade agreements risk becoming symbolic rather than substantive, with countries able to delay or avoid legislative endorsements without consequence. They also suggest that higher tariffs can incentivize foreign investment in the United States by making American markets more attractive relative to those abroad. The announcement has also drawn commentary from international observers who warn that escalating tariffs between allies can erode trust and complicate cooperation on issues that extend beyond trade, including security and geopolitical strategy. The U.S. and South Korea maintain a long-standing military alliance, and both nations face common challenges related to regional security in East Asia. Economic strain, however, has the potential to spill over into other areas of bilateral cooperation, depending on how the dialogue unfolds in the coming weeks. As South Korea's legislature prepares to resume deliberations on the previously negotiated agreement, lawmakers and industry leaders are under pressure to weigh the benefits of ratification against the potential economic strain of continued tariff escalation. At the same time, South Korean negotiators are expected to seek assurances and clarifications from U.S. counterparts to protect the interests of exporters and to stabilize market expectations. The timing and specific date on which the new tariff rate will take effect remains somewhat unclear, adding to market uncertainty. U.S. officials have indicated that implementation will depend on internal processes and consultations with stakeholders, while South Korean authorities continue to emphasize the importance of constructive dialogue to avert unnecessary economic disruption.